because I want to make sure I get this on video. Okay, so on an upthrust, price makes a high. We call this the supply line, and you can see here I've marked it on gold. At the high was 1334, and price made a high, and I drew the supply line. Price retraces off the high and moves down. Okay, you can see that price actually did move off of the high and move down. Then price comes back to the supply line on an increase of volume that is at least 40% greater than the high that formed the supply line. So this is the high that I'm talking about. It pulls off, then it comes back and makes a new high at 1334.2. Okay? Price then closes below the supply line, and of course that bar does close below the supply line. Now, what Wyckoff was looking for was a volume bar that had an increase of 40%. Back then, remember, they were doing this on paper, and they didn't really use, they didn't tell you the buyers and the sellers. They just told you total volume. So what he said is that if price comes back to this line and does it on an increase in volume, the presumption is most of that volume would be sellers because price does not really move substantially. You can see that between these highs. You have, and let me do this, from this high to this high, I would say there's a 40% increase in volume. But why did they only get 2 ticks? That's what Wyckoff was looking at. And he said, when you see this happen, that price will move down. That would be the logical assumption. Now, in NinjaTrader, we plot all of the buyers above 0. All of the sellers are below 0. So this is total volume. From the top to the bottom is total volume. But from the 0 line upwards would be buyers. Does everyone understand that? So when we look over here, we would say, yes, they definitely increased by more than 40%. Okay? Then, when you look at this and you say, okay, were they rewarded for their efforts? They got 2 ticks. Wouldn't you expect them to get a little bit more than 2 ticks? I mean, I would say that's a huge increase in volume, okay? They were not rewarded for their efforts. Now, in NinjaTrader, we actually go one step further and show you where the delta ended. And what you would want to see is that the delta ended on the seller side, because that's the presumption of the upthrust, is that sellers came in and controlled the bar. Okay? The delta being plotted below 0 tells me that yes, in fact, sellers did control that bar. Does everybody understand that? Now, to me, that takes a lot of analysis. So, let me show you what it would look like on multi-charts. And really with TradeStation, it would look the same. Here's the same scenario. Here's your high. Here's your supply line. Here's the high that came back to test it. And you can see that all of the volume was selling volume. To me, this makes it easier to see. In NinjaTrader, the limit orders is the actual bar itself. Whatever is plotted above 0, whatever is plotted below 0, Michelle, are the buyers and the sellers, okay? The market orders is this little hash, okay? And we plot the cumulative market orders. So at the end of the bar, did it end up positive or did it end up negative? Do you understand that, Michelle? Now in multi-charts, what I do is actually plot one on market orders and one on limit orders, okay? The delta is actually market flow, Michelle. The cumulative delta is the cumulative market flow. So by the time you say, okay, there was 50 buyers and there were 70 sellers, what's the cumulative difference? That would be cumulative delta of negative 30. Whereas delta itself would be, in that example, it would be, let's say 30 buyers would be delta to the upside, delta to the downside would be 70. Do you understand, Michelle? I want to see the cumulative difference. I don't want to have to analyze it myself. Let me put it up in here. Okay, if I was just looking at delta, okay, you can have two deltas. You can have buy-in delta, and let's see, total buyers entering on contracts, let's say it's 50, and then the selling delta would, let's say it's 30. So you had 50 buyers and you had 30 sellers, okay? Cumulative delta, on the other hand, would be the difference of those. So if the buy-in delta was 50 and the selling delta is 30, then the cumulative delta is negative 30. I'm sorry, negative 20. Do you understand now, Michelle? Oh, yes, it would be positive. I'm sorry. All it is the difference between the buyers and the sellers. That's all. Yes, Dan, it would. In TradeStation, you can do it, not in TradeStation, I'm sorry, in multi-charts. If you go to File, New Chart Window, and what is that gold? When you click on Settings in multi-charts, you do cumulative delta. We'll do a 3-minute. We'll do ask traded versus bid traded and say OK. It will take a while to load. It's very intensive. That is the way it's plotted on a chart formation. So right now I know there's, from the point that this started, it's a negative 480 contracts. Do you understand that now, Michelle? So right now, as you're looking at this, and this is a 3-minute cumulative delta chart, okay, and you're looking at this, the one thing I would question is why is it during all of this period the delta is still down? On each individual volume bar within NinjaTrader, yes we do. It is a cumulative delta per bar. That is absolutely correct, Troy. Okay, do you understand that now, Michelle? Yeah, it's very, very hard to understand, Michelle. It's not easy to take on the cumulative delta, I'll tell you that right now. It's the only thing that made me understand volume, though. Okay? So instead of looking between highs like Wyckoff did, I just look at the volume itself. Because basically what Wyckoff did was actually look for divergence. That's what he was looking at. And that's what I choose to look at. Not today, I'm not, no, Dan. Today I actually want to walk through what are valid setups. And let me get it back. I did want to go over the up thrust only because someone asked me about it. Volume itself, Michelle, is a leading indicator. And if you don't believe it, go back and read the blog this morning where I told you the DAX was probably going to move up and retrace some point today. And if you watch, it did. Let me find that chart. I've got a lot of charts open this morning, so let me find where I did with it. If you go back and actually read the blog this morning, Michelle, I said the DAX was probably going to go up, and I did it. It was somewhere around in here. It may have been here, somewhere between 6 and 7 this morning. I said we're going to see a retracement on the DAX. Why did I say that? Because you were getting divergence on the higher time frames. The ADX was oversold. You've had this big down movement. It's every indication said it's going to have some sort of retracement. Then when the U.S. market started opening, you got your retracement in. Now it's just kind of flip-flopping back and forth. Now, the volume told you, I would say about an hour before it ever started moving up, that it was going to move up. You know, it doesn't matter whether you were using the cumulative delta or whether you were just using the volume indicator that we have. It told you it was going up. Now, the problem is how complicated do you need to make it? And believe it or not, there is a difference there, guys. Some people really, to understand it, they need it to be more complicated because of the way their brain works. I need it to be simpler because I've got to do this on the live edge of the market, and the only way I can do that is by making it simple for me. Engineers tend to like cumulative delta better because it keeps them more engaged. Okay? All right, let's move on, guys. All right. Now, an entry with THD means that price must be close enough to the ATR or the congestion dot. Okay. Price must have diverging volume and it must be supported by a higher time frame. What does that mean? It means that the higher time frame is trending and the ADX is not indicating an overbought or oversold situation. A magenta peak on a higher time frame, meaning that the time frame must be greater than 45 minutes. I don't do this on 3 and 12-minute charts. A higher time frame could be at an ATR or at a congestion dot with potential diverging volume. We had that yesterday. The same time frames I always look at, Michelle. It's a 1440, it's a 720, it's a 180, it's a 45, it's a 12, it's a 3. It's the only time frames I look at. Okay? This generates your entry, guys. Once you're in the trade, then you have to set your stop. Okay? You can never ever risk more than 2%. Okay? It will only end in disaster. And the reason that you're doing it is you're thinking, oh, but I can make so much money. The way I see it is I've got to protect my account at all costs. Your stop must always be above the ATR if you are short. It has to be below the ATR if you are taking a long position. Same thing goes for congestion dots. If you go short at a congestion dot, your stop must be above the congestion dot. If you are going long at a congestion dot, then your stop must be below that congestion dot. Stops always have to be low risk. Now normally this is kind of a no-brainer because when you're looking to go short, you're entering at the close of an up bar, or if you're looking to take a long, you're entering at the close of a down bar, which happens to be right at the ATR. Okay? If you're using a 3-minute chart, we can define it even a little bit better by saying at no time can you take a trade that's over 10 ticks unless it's gold in the DAX. Okay? On gold you can do 15. On the DAX I would do 20. They do move a lot more than typical markets. Okay? You can lose a lot of money. Okay? And if you're not protecting your account, then you've already failed at the first rule of business in trading. The NASDAQ, let's see. Yeah, this one you're at the ATR right here. And the ATR does catch it. It called it yesterday. You see how it called it yesterday? Now this is probably one of my favorite signals when it flips to the downside because immediately that tells you, yeah, it's going down. Yeah. When you can catch it right at an ATR on a higher time frame, Larry, you're right. It is a good trade. Especially when I see it flipping to the downside. That's sweet, in all honesty. Okay. Now, how do you take profit targets? Okay. There are so many different ways of taking a profit target. You know, if the market is trending and you understand volume. Sorry, I had to sneeze there. You can stay with the trade until the trend divergence tells you to exit. You use a minimum of 1 to 2 risk to reward. That means for every dollar risk, you take $2 in profit. If you have a non-trending days, you just take one profit target. Depending on how much room you have between the two, you may just want to take one profit target, or you can use the ATR as a trailing stop. I typically do not use the ATR as a trailing stop because I'm not trying to stay with it for the duration of a trade unless I am trading in a swing trading capacity. Okay? Does everybody understand that? Okay. Yesterday, if everyone remembers, I told you that price was at an ATR over here on the 45-minute chart, and I need to get back to yesterday before I can show it to you. Okay, this was the market opening. It went down, it made a low, and then it closed up at the very top. That told me that buyers came into that market on that particular bar. Then we get close to the ATR here. We actually get a little bit closer here, makes a new high, and it flips to the downside. Okay? There is no entry here. You can see that the volume is actually increasing as it's coming back to the ATR. There's no way I'm going to take a long position because this is telling me this is going down. Here you have diverging volume, but you're not close enough to the ATR. How do I know that? Because my price bars are not white. Now I have a white price bar. You do have some divergence because you are measuring from here to here. Now, why are you measuring like that? It's very simple. We're measuring as this retraces back to the ATR. So if I turn around and if I mark this bar and then I mark this bar, is it a higher high? Yes. There's your divergence. This is why I say you have to sit off of that ATR. It is common to come back and test the ATR. It may exceed it. It's depending on where it closes as to whether it flips that ATR or not. Is everybody with me so far? And you can afford to do that because you're entering at the ATR. That was the resulting trade. And if you were trend trading that, your divergence did not come in until here. Does everybody understand that? But you've got to know how to read trend divergence. You've got to know how to read ATR divergence. Then you get this uptrend. This uptrend was probably from this magenta peak here. Did it retrace to the ATR? Yes, it retraced to the ATR. That's what we would have anticipated. To the short side, you're not close enough here. That is too much risk. That was your first entry. There's your low. There's your low. And then that was your final low, so no. This was your trend divergence low. You can't use that bar. This would have been potential divergence. It is not confirmed divergence. It's where it occurs at, Michelle. ATR divergence, you're just reading volume back to the ATR. If I'm looking for trend divergence, we'll do it from this one. This is where you have the ADX peak comes in. Now you're making lows. So you are comparing these, and give me just a minute here, guys. You've got two components for ATR divergence, okay? One is price has to be close enough to the ATR, okay? So we can use all of these, okay, to see if we got ATR divergence. And let me move them over so you can actually see the volume bars, okay? So right now it looks like, oh, volume is increasing as it comes back to the ATR. This is the one that actually says, okay, this is where the seller stepped in. What's wrong with it? Too much risk? So you can't take it. Okay, let me close this because I'm getting too much interference in my headphones. You don't have to have confirmed divergence on the entry, but you do need it for trend divergence if you're using that for an exit. Do you understand that now, Dan? Trend divergence always requires confirmation. ATR divergence does not. Because what we're doing is lowering our risk by taking an entry without it being confirmed. If you waited for confirmation, you're increasing your risk. And I don't want to increase my risk. The other option that you also have, Dan, and let's go back to that scenario. That was this morning. Okay. Do you see how the ADX is above 80, Dan? Artemin, there's several things that can confirm divergence. All right. Oop, wrong one. This is the point that you're above 70, so we are already expecting what? This is telling us it's oversold, is it not? And I've showed y'all how to do this many times. Offset the high of the previous bar. When this bar finishes, pull it down a little bit, okay? When that bar when this bar finishes, pull it down a little bit, okay? You just want to offset it by a few ticks. When this bar finishes, pull it down. When this bar finishes, pull it down. When this bar finishes, it's about the same. You don't have to pull it down. This bar finishes, pull it down again. This bar, the divergence actually came in first, okay? But if you didn't exit there, you could have pulled it down to just a few ticks off the high. If it touches that line, that's your stop. Does everybody understand that? Because what happens if we get a magenta peak? Pulls back to the ATR. What happens normally before an ADX peak? Divergence. This would be trend. This is a downtrend. You're using trend following. You are going into in a 12-minute and you are going into a 45-minute. That's trend divergence. Back to the ATR is ATR divergence. Does everybody understand that now? You could say that, Michelle. Do you understand that now, Dan? Now, right now, it's moving up on the 12-minute. It's moving up on the 3-minute, okay? So, oh man, I want to get in this long position. No, there is an ATR right up above you. Why would I want to do that? What would possess me to do that? What? I want to make money? Sure, I want to do that every day. Okay? But I also know that it's got to clear this ATR before I can go into that market. And I also have to know that right up here at 3701.75 is my area of resistance. That is immediate. Okay? So if I was to go in this, let's say that it does flip this, it does come back to test the ATR over here. In that case, I'm going into the 12-minute. I'm going into the 45-minute. Is it going to be a trend trade? No. Because right up above you, right here at 3701, and this is going to pull down towards price, you can hit resistance. It makes absolutely no sense to me for me to try to trend trade that. Does everybody understand that? I'm not even looking over at my 3-minute until I can tell you I've got a trade on my 45-minute. Does everybody understand that? You can see when price came back to the congestion dots right here on the 3-minute, okay? You can see that you had diverging volume. Do you see that? Here's a low, here's a low. It was lower selling volume on that low, but the risk is too high on that trade. I'm not willing to put my money on the line for something that's going to give me peanuts. And that's, to me, that's what that is. It's peanuts. Does everybody understand that? Yes or no? Well, the risk on that is too high. You're going to have to risk about 3 points. Well, 3 points is 9 ticks. No. 3 times 4 is 12 ticks. I'm not willing to risk 12 ticks. There's no way I am going to risk 12 ticks on the NASDAQ, especially here lately. It's just definitely not worth it for me. You're going to risk 12 ticks, and I've already told you not to risk more than, what, 10 ticks? You know, if you were going to do this, considering the DAX moves the same way, you're better off doing the DAX. It has the same pattern on it. There's the DAX. Do you see how the buyers came in on this bar? Okay, made a lower low, buyers start to come in. The DAX is going to give you more than what the NASDAQ is. NASDAQ's lower. But the DAX is it's 12.50 a euro. 12.50 euros for every tick, which I think comes up to about $17. That is correct, Dave. And I would be willing to say that, let's see, that was today. Where was yesterday? All right, your entry would have been right about here. Let's see where the close of that bar was. 94.75. And you got to offset this ATR. So let's just go ahead and say you risked a complete 10 ticks, which would be 96, 97.50, somewhere around in there. Actually, 96.25, I believe. All right. Now, if you did come out on the close of this bar, I believe it was 69. Would somebody like to calculate that risk to reward? I actually like the NASDAQ better than the Russell, Larry. What's your risk to reward on this, guys? You're risking about 3.5 points, and you made 30 points. Well, that's the reason I pulled it off over here. Yeah, I think it's more than 2.5. Okay, 8.5 to 1. What that means as a trader, okay, is that you could have 8.5 trades before it knocked out all those profits. All right. Does everybody understand that now? This is not peanuts. This is why I trade. Okay? Let me put the clipper on. If I can find my clipper. This one, I think you missed your profit target by maybe 2 ticks. But the maximum reward on that would have been 14 ticks. All right, let's fast forward to this morning and let's do this one. Okay, from here to here, you got Clipper 1. I mean, it was a valid trade. You could have done just 10 ticks. That would have been 20 ticks. Okay. But to me, this would have been peanuts compared to the other one. Okay. Sometimes that's all you get is Clipper 1 though. I don't do that, Troy. I mean, the time frames that y'all see that I've got up right now, those are the time frames I trade. And the only exception to that is ETFs or stocks. Get rid of all these lines. Put the clipper on the short. Let's see. Go back and find it. Let me offset the ATR. Let's do true. Do 10. Yeah, 10. This would be 20, 40, 60. There you go. The directional volume indicator doesn't have the ADX built into it. Yeah, it would have been probably about a clip or 6 actually. Do I ever use the 1 minute time frame? Normally I never have to. Does it have a built-in alert? No, it doesn't, Larry. And you know, this is why I say I use multiple platforms. Every platform has strengths and weaknesses about like us as traders. So yeah, I do the same thing, Larry. You know, I'll go over to Ninja and compare Ninja on the delta of the volume indicator to make sure what I see is correct. The only complaint that I have, and I've got to talk to Ninja Trader or my Programmer One, is I keep losing my freaking workspaces. And I spend a lot of time setting up my workspaces, and I lose them. The workspace is there, but my charts are gone. I don't know what I'm doing. And Ninja Trader that does that, but it's doing it. It's probably a user issue too. Well, I save it and everything, Dan, but when I open it up, I get nothing. No charts. All the charts are gone. And I'm like, what the hell happened? That's the reason I don't have Ninja open today, because I lost my charts again. I don't know why I'm losing my charts, but I'm losing my charts. It's a case of the missing charts. And I've got to talk to Ninja and find out why it's going on. Maybe that's what it is, Larry. I cannot figure it out. Yesterday I saved everything because I did all of these nice workspaces for the trading room so I could monitor the higher time frames and stuff. Gone this morning. Gone, gone, gone. Give me just, I want to see something real quick. Here is a perfect example of what I'm talking about when you get all involved in a 3-minute chart. And this is exactly why I don't. Okay. So right now you came back to this ATR right here and you can see that there was a decrease in volume, correct? So everybody thinks, oh yeah, that's it. There's the entry. Look at where you're at on the 180-minute chart. Then, see if I can find that little thing again. That's it. Now I want you to watch. Okay, on this high right here, you had 917 buyers. As it came back and tagged the ATR, sellers are coming in. Do you see that? It's a cumulative volume negative 31. I would notice that. Do y'all understand that? So this one, you would probably get stopped out of. I know, you're right at that ATR. It's the same thing that we saw yesterday on the 45-minute chart. And I would have noticed that. Would you have noticed that would be the issue? Because what the delta in the volume is telling me over here on the 180-minute chart, what it's telling me is this is making a new high and it's tagging the ATR. Sellers are selling into that bar. So that tells me I ain't touching that little ATR trade. Do y'all understand that now? That is not complex, but it is attention to details. It is staying grounded in the higher time frame. Now, could you see that on TradeStation? No, I don't have the information available to us as programmers to give you that information. And Dan, that's exactly why I tell you to mark the lines on your chart. We're going to try to do it in NinjaTrader next month. It's one of the projects that we're working on. We're in NinjaTrader. We'll actually be able, just like the zones over here, this is a zone. We'll be able to actually plot ATR zones on your chart. We're going to work on it this coming month. And that way you'll always know if you have ATR or congestion. Does it have to be? No, but it's really good if it is. Artemin. And I've told y'all for, I know, the last 6 months, always mark the ATRs on your chart. Always. If it is even remotely close to price, you better put it on there where it's in your sight line. You know, right now on the NASDAQ, there's 3661.25. Do you think that would have made a difference in your trading, Dan? Something as simple as just snapping that line on there? It takes a lot of effort, takes a lot of time, but it makes a difference in your trading. This is why I tell you to put those lines on your chart. It is well worth the time. Just like right now, you know, 3702.75. And you do, and this is one of the things that, yeah, it takes a lot of time because you have to update them throughout the day. okay? But this was your support, and this is where it's going to find resistance, more likely than not, unless it finds it right here at 3684.75. So right now, as it stands, every time it's come back to that area, it's thrown divergence. This one being the strongest one so far. It's the ATRs on the higher time frame. That's all it is, guys. And if you mouse over, it tells you, okay, the short stops at 3702.25. Snap a line. Mouse over at congestion, 3661.25. Snap a line. And that way, you're always reminded, ooh, I'm going into an area of congestion, or I'm going into an area of resistance. Because I know you can get very, very involved with a 3-minute throughout the day. Well, I looked at all my higher time frames. It's fine. And you don't remember you had that ATR there, or you don't remember that you had that congestion dot there. And you know, you can do this on all these different time frames. Okay. You know, you've got an ATR here. It's bouncing up, but right up above it, you have a congestion dot. Okay. Look at the congestion that was on the British pound 180. But what is supporting it? This line of ATRs over here on the 720-minute chart. Don't look here first. Look here first. That is correct, Dan. And that's when you start getting the good trades. When you're actually watching what's going on the higher time frame, this is where you go from peanuts to what I would equivalent to gold mines. Okay, you've got extremely low risk entry points. You know, look at the euro. Look at the congestion zone on the euro, and it's coming back to this ATR right now on diverging selling volume. Where do you think it's going to go, guys? It's probably going to go up. And this is something that's going to play out probably this afternoon or tomorrow's London session. Do y'all understand that? That's how I knew what the DAX was going to do. And then you just filter your trades and say, nah, I ain't going against that now. Okay. Look at the congestion zone up here on the 180. Okay. It's come back and tested that congestion zone twice. Okay. And what did it do when it tested the congestion dots? It went back down to the ATR. Does the ATR move with price? It most certainly does. What have you got now? You've got it at an ATR on a 720-minute chart. This is not on diverging volume, okay? So this tells me you might get a lower high here, but it should actually break that congestion dot. That ATR. Okay, look at the Japanese yen. Here's your ATR, and that's what supported price to go up. Okay, this is where buyers came in on that low. Okay, what should it do? It should actually start going up. You've got support here, you had support here, you had support here for price to go up. Okay, it doesn't matter what these little bitty time frames do. I don't trade the 3-minute on those anyway. On the Aussie, you're right at an ATR, but there's no divergence at that ATR. That tells me I can't take that trade unless I see something on one of these other time frames like the 720, the 180, or the 45 that will give me a very short-lived trade. Okay, it wouldn't be a trend trade though. And I would not be trading it as a trend trade. Okay, not unless this flips to the upside. And it could, because this is building intra-bar. Okay. And again, I do not trade the 3-minute on these. Okay. They're too slow. What about the Canadian? It came right back to the congestion dots on the Canadian, and you had diverging volume here. It should go down. Okay, it would have to. In this one, if you entered here, you had way too much risk. You can't enter on something like that. Okay. Could you go up here and say, okay, if it was at a ATR on either the 720, the 180, or the 45, could you enter it? Yes. You know, you're looking at ETFs. I don't trade a 390 on the ETF. I look at it just for the volume aspect of it. But then I'm looking, okay, is something at an ATR that I can get into? Okay. Let's go and look at gold. Nope. And I don't trade these little retracements on gold. Even though that's on a monthly chart, those are not the kind of trades I like to get into. I like to get into these where I'm going to be in them for a couple of months. Here, you're at an ATR, okay? You had diverging volume here. Diverging volume. You didn't get close enough here. I know that you did here. That did not paint because I wasn't online with it. You did have divergence. Let's see. That was QLD. Look at TNA. Okay. This one, there's been no divergence on it. Let's see. You did have divergence here. You did have divergence here because this is lower than this one over here. So you had two really good entries into TNA. And the only thing that, like, I use a daily or a monthly for is to make sure I don't have an ATR in the way. Do y'all understand that? There's no divergence here. Let's look at the SPYs. No divergence. Again, no divergence there. I would expect that to continue down off of that volume. Again, you're not seeing any divergence here. Without the divergence, you can't take the trade. There's no divergence at that congestion dot. If you come back here, you did have divergence. That would have given you a trade. There's your divergence here. Your white here, there's your divergence. There's your divergence. The only thing I would look at is, okay, how far is the congestion area, because that's what it is. So the congestion area, when we identified the trade, let's see, the congestion was at 70 and the stop was at 61, so that was about 10 points, $10. It's up to you whether you would have traded that or not. Okay, this one you're coming back to the ATR up here. You're doing it on diverging volume. Okay, the next thing I would want to say is, okay, we're at 86 and then you've got congestion dots at 81. Could you do a credit spread? Sure. Yeah, you could very easily, Dan. Okay. That was XLE, AC, AGQ, I'm sorry. I don't see anything there that would make me want to trade that. FXY, again, you're right at the ATR, okay? And it's doing it on diverging volume. Could you take a short? Because that is extremely low risk. Yes, but watch out because you've got that potential for a magenta dot here. EWZ, nope. Silver, you know, as this came back, did you have divergence? That's lower, so there is divergence there. Would I want it knowing I've got resistance up here at 25? No. Could you do a potential credit spread for 1 month? Sure. On this one, there hasn't been any divergence. XLF, no divergence. Natural gas, let's see, you had divergence here, you had divergence here, and this was in a downtrend. You could have very well easily taken that one. QID. Oh, let's see. You were within about 40 cents of that ATR on diverging volume. Yeah, you could have taken it. I saw that, Troy. Yeah. Here you had diverging volume. You knew that you had an ATR below you over here. That would have made a difference. This would be more of a credit spread, not to go into the market. VXX. No, you're way too close to that ATR. You wouldn't want to take that. The Silver Trust. You got 31 million contracts, I would say, yeah. But now silver, as far as futures, it does, but it also has a very, very high margin account. Let's look at FAZ. Nothing. FXI. Okay, you just came back to this congestion dot on the diverging volume. You do have resistance above you at 41.56. Yeah, that would be one, maybe a credit spread, if the spread was enough. You had slight divergence there, but this is making its way down to this ATR. I don't think I would have taken that. Now Vanguard, I like Vanguard, so No, there's no divergence there. VGK, you're close enough, but there's no divergence. VHT, I don't see any area where I have white candlesticks. Actually, that one is. You did have divergence there. You could have been into that one. VNQ, this one you had divergence here. So yeah, you could have went into that one. This one to me was credit spread. And the reason is because you've got that line of congestion dots above you. And you would have had to have, well, with a credit spread, no, you don't have to worry about it. You just would have done a credit spread here. VV, I don't see any divergence as that pulled back. I don't see any divergence here as well. Now, could you have went into that on a lower time frame? You could have. I generally don't. This one is a different type of divergence that told you, yes, more than likely it was going to go up. You did have, no, you didn't. SVXY. Let's see, no divergence. No. KRU. There's your divergence there. There's nothing above you over here. Those are the ones I like. USD. You did have divergence here. Between here and here you had divergence. You also had divergence between here and here because this is a lower low. And you also had divergence here. SAA. Let's see. There's no divergence. There is, but that's a hard divergence for y'all to pick up, and I know that. There is divergence here. You have not had divergence. Yeah, that's lower low. You have had divergence between this low and this low. And that was on the way back to the ATR. UWM. No divergence. No divergence. GASL. There was divergence between this low and this low. I would have done a credit spread on that though, especially because you probably had this right up above you. Then you had divergence here. You had divergence here. Not here because that's not a lower low. So you've had two instances of divergence right there. Yeah, you very well could, Stephen. The thing of it is, typically when I'm trading these, I'm in long term. So I'm not in short term. Here's your divergence on this one. As this is coming back to this ATR, you're not seeing divergence. MWW. You could do a credit spread on this one from here to here. That's all I see right now. and you're right at that congestion dot. I would let it go through this congestion dot and then it will pull back on the weekly, Carlos. That's what I would do. How far? No, it's not how far. It's as this is pulling back. Okay. Okay, someone wanted me to go over the trade again for the NASDAQ. And we went over this earlier. This is the trade. You had divergence right at the ATR. That was your entry point. You would have been risking 10 ticks, and you actually knew to come out of it on this bar when it formed divergence. I think, what did we say, guys? 26 points. And this coincided with price being at an ATR on a 45-minute chart. I looked at it earlier. I haven't looked at it since I've been in the room. Yeah, it's got to come back and test for sellers right now. Because you had a bar that was controlled by the sellers that made a high right at a congestion dot. So in my opinion, it's still going to have to come back and check for sellers again. That's what I would think, Carlos. And this is one I'm actually in on the ETF because I think it's going to go up. It doesn't mean they won't check for sellers again, but I do believe it's going to go up. And it's long term, it's not on an intraday basis. And the minimum, normally on any of my stocks or options, I'm out at least 4 months, sometimes more, because I hate time decay. And it really depends on how long I think I'm going to be in that trade. If I think I'm going to be in that trade for a while, I will be a lot further out. All right, any other questions, guys? Now, I did record today's presentation, so I'll get it up on the website either later today or tomorrow. I do have a webinar this afternoon for Kickstart Your Trading. We will be going over scanners and radar screen and market analyzer for NinjaTrader. Well, thank you, Dan. I wanted to do something different today. It should be sent to you in an email, Dan. If not, go to the annual members section of the website, and there's a link there that you can register, but normally they email it to you. I believe it's 1 hour before it starts, so you should have it like around noon. Well, thank you, Julie. Let me make sure that send me an email, Dan, okay? And I'll make sure I send you the information. And Julie, I'm glad that it was helpful to you. I will post the video on the THD blog so everybody can have a chance to see it. Okay? All right, guys. Everyone have a wonderful day. I'm going to go, and I will see you next week. And for those in the 1 o'clock session, I'll see you at 1 o'clock.